Mike Michalowicz, Profit First, transform your business from a cash-eating monster to a money-making machine. Are you struggling to make your business profitable despite following the age-old sales minus expenses formula? It's time to unlock the secrets of the book Profit First by Mike Michalowicz. Dive into a refreshing approach that's designed to work with your instincts, instead of against them. In this summary, you will learn the pitfalls of the traditional profit formula, discover how Parkinson's law and the primacy effect play a role in your business's success, and find out ways to rework the profit formula to guarantee consistent profits. Moreover, you'll explore the importance of managing your finances with multiple bank accounts, an easy strategy for growing your profits, and how to apply these techniques to your personal life for financial freedom.
The traditional approach to profit rarely works. The traditional approach to profit often leads to failure and goes against natural instincts. This is because the formula for profit triggers our tendency to use up whatever is available. In addition, the primacy effect causes entrepreneurs to focus on making sales, believing this leads to profits. However, to guarantee profits, entrepreneurs should rework the formula by determining their desired profit percentage before subtracting it from sales. This allows their natural ability to work with what they have to kick in. Smaller money portions for better financial management. Learn how to manage your finances better by dividing your money into smaller portions through multiple bank accounts. Have you ever heard of using smaller plates to eat less food and lose weight? The same principle applies to managing your finances. Instead of piling all your money into one big account and spending everything, the author suggests dividing your money into smaller portions through multiple bank accounts. The key message here is that working with smaller amounts of money makes managing your finances easier. The author recommends setting up 5 different bank accounts for your business, one for main income, one for profits, one for the business owner's salary, one for taxes, and one for operating expenses. To manage your money effectively, every time the business earns revenue, it should be deposited into the income account. Then, transfer money to the other accounts, starting with the profit account. Once you've taken your predetermined profit, the remaining money is used to fund the rest of your accounts. To ensure discipline, each account should only be used for its specified purpose. To avoid dipping into 2 important accounts, profit and tax accounts, the author suggests keeping them out of sight by having them with a different bank. This way, you are less likely to spend the money, and you can keep it safe for the long term. In summary, dividing your money into smaller portions through multiple bank accounts helps you manage your finances more effectively. By having separate accounts for different purposes, you can keep track of your spending and avoid dipping into important accounts. This simple yet effective strategy can help you achieve financial discipline and success. Grow your profits gradually. To increase profits, start by setting a defined target percentage. Look at other companies in the same industry and use their profit percentages as a reference. Allocate just 1% of your company's total revenue to your profit account and reduce operating expenses by 1%. Increase profit allocation and decrease operating expenses each quarter until you reach your target percentage. The key message here is taking small steps towards a defined target is the way to grow your profits. Enjoy your profits. Don't just admire your profits, use them as a reward and safety net. Take 50% at the end of each quarter and enjoy it, while the other 50% stays in the account as an emergency fund for the business. Only reinvest excess profits after setting aside 3 months' worth of funds. In Enjoy Your Profits, the author compares baking a cake to running a business and emphasizes the importance of not letting profits go to waste. Rather than simply admiring them, profits should be used as a reward and safety net for the business. To make the most of your profits, the author recommends taking 50% at the end of each quarter and using it to treat yourself or your family. The remaining 50% should stay in the account as an emergency fund for the business. This way, profits are not misused or relied upon to support the business. Only when the profit account has reached a certain level should excess funds be reinvested in the business. The author suggests setting aside 3 months' worth of funds as a safety net before deciding how best to use the excess money to grow the business further. By following these guidelines, the business will have a consistent profit, and the owner will have money in their pocket as proof. But the journey does not end here. The author hints at more ways to increase profits in the next part. Boosting profits with efficiency. Want to make more money with less? The key is to find ways to maximize your business's efficiency. A simple way to achieve this is by reducing costs in areas where you're overspending or wasting time. Companies like UPS have succeeded in saving millions by making small changes, like avoiding left-turn lanes during deliveries. Another way of increasing profits is by focusing on serving your customers' common needs instead of catering to specific ones. This will help you to maximize your resources and be more efficient. To improve your company's efficiency, analyze your operations, figure out what you're best at, and then market those services. Staying efficient will have you reaching your profit goals in no time. How to pay off business debts quickly. Many entrepreneurs find themselves in debt while building a company. However, paying off debt should not get in the way of making the business profitable. It is possible to continue building cash reserves while paying off what is owed. The key is to continue putting a percentage of the company's income into the profits account while paying off debts. Sacrificing 99% of profit share towards debt payments while keeping 1% for oneself can get one debt-free much faster. To be strategic with paying off debts, start by listing them from the smallest to the largest amount, paying the minimum on all except the smallest, and putting the rest of the money towards that debt until it is fully paid off. The money freed up can then be added to payments for the next debt on the list until all debts are fully paid off. Profit First System for Personal Finance. The Profit First system, used in businesses to allocate finances, can also be applied to personal finance to gain financial freedom. The key message is to split your personal finances across different accounts like income, expenses, emergencies, and retirement. Transfer a percentage of your income immediately to your retirement account and use 99% of the allocated funds to pay off debt. Keep your lifestyle consistent for at least 5 years while saving as much money as possible. Invest half of any income increase in your retirement fund and the rest in your lifestyle. Eventually, your retirement fund will earn enough interest to fully support your desired lifestyle, making you financially free.
In the light of the insights provided by Mike Michalowicz of Profit First, it's evident that tweaking the traditional profit formula allows entrepreneurs to achieve the financial success they desire. You now understand the significance of working with smaller amounts of money and allocating funds to different bank accounts. By taking small steps towards your target, maintaining discipline in using your profits, and learning how to do more with less, you can truly transform your business into a money-making machine. The strengths of this approach are not limited to your business. Applying this system to your personal life as well will lead to financial freedom and overall success.